All right, the latest housing numbers for Ottawa are in, and wow, they're telling a really fascinating story. Not just about where we are right now, but maybe more importantly, where we're headed this fall. So let's just dive right in and decode what's actually going on behind the headlines.
Check this out. $920 million. That was the total sales volume for real estate in Ottawa in just 1 month this past July. And here's the kicker. That's actually up 7.2% from a year ago. I mean, think about it. Even with higher borrowing costs, that's a super healthy signal that the market is active.
Okay, so here's what we're going to cover. First, we'll get a quick snapshot of the whole market. Then, and this is the interesting part, we'll dive into the 3 very different stories playing out. After that, we'll talk about what buyers are thinking these days, what to watch out for, and we'll wrap it all up with a solid playbook, whether you're buying or selling.
All right, let's jump into it. If you had to boil down Ottawa's market to just one word right now, that word would be balanced.
So the numbers here, they tell a story of pretty steady growth, right? Homes sold, up almost 5%. Average price, up a little over 2%. But look at this. New listings are up almost 12%. That's a big jump. And that's what's pushing up something called months of inventory. So, what on earth does that actually mean?
Okay, months of inventory. It sounds technical, but it's actually super simple. It's basically asking, if nobody listed a single new house, how long would it take to sell everything currently on the market? And the magic number, the sweet spot, is somewhere between 3 and 4 months. That's what we call a balanced market.
And guess where Ottawa is? 3.2 months. Bang! Right in that sweet spot. And this is so important because it means we're not seeing those crazy frantic bidding wars anymore, but we're also not seeing sellers having to slash their prices. It's just a stable, healthy place for everyone to be.
But here's where it gets really interesting. That balanced top-line number, it's kind of hiding the real story. See, if you scratch beneath the surface, you realize Ottawa isn't just one market right now. Nope, it's actually 3 completely different markets all at the same time. I mean, this chart just says it all, doesn't it? Just look at the massive gap. Townhomes, they're on fire, surging ahead with 8.3% price growth. Then you've got single-family homes just kind of holding steady at 2%. And then condos, they've actually dropped a bit, down 1.6%. I mean, these are 3 totally different paths.
So what's going on here? Well, townhouses are the rock stars of the market right now. Why? They're the perfect middle ground solution, right? You get more space than a condo, but it's way more affordable than a big detached house. So you've got first-time buyers and downsizers all jumping in. Now, on the flip side, the condo market is cooling off. You've got more of them for sale, especially downtown, condo fees keep creeping up, and let's be honest, people are still looking for a bit more space. That's creating some real pressure.
And that brings us to our third story, the single-family home. This is kind of like the stable anchor of the whole market. Prices are up a little, but nothing crazy is expected. There's enough inventory for buyers to have choices, but, and this is a big but, if you have a move-in ready home in a fantastic neighborhood, oh yeah, you're absolutely still going to see some competition.
Okay, so all this change in the market, especially with more homes for sale, it's having a massive impact on the most important thing of all, the buyer's mindset. That feeling of urgency, that panic we saw a few years back, yeah, that's definitely starting to fade.
Just put yourself in a buyer's shoes for a second. There are over 4,200 homes for sale right now. That's up 14% from last year. How does that change the way you approach your search? What does that do to your mindset?
It changes absolutely everything. The psychology just flips. It's a chain reaction, really. More listings means more choice. More choice means buyers can actually take a breath. They're not pressured into making a snap decision. So that FOMO, that fear of missing out, it starts to disappear. And when that happens, the buyer's focus shifts to 2 things and 2 things only: price and presentation. Is it priced right, and does it look good?
Okay, so looking ahead to the fall, there are a couple of big, let's call them wild cards, that could totally change the game.
The first one, and this is the big one, is interest rates. If the Bank of Canada even hints at future rate cuts, you could see a flood of buyers who have been waiting on the sidelines just jump back in, and that would heat things up fast. The second wild card is just the overall economy.
Now, Ottawa's public sector is a great shield for sure, but we're not totally immune to what's happening out there. And if things get uncertain, that could cool off demand.
All right, so let's put this all together. What does this mean for you? Let's talk strategy. Here's your playbook for winning in this balanced fall market, whether you're a buyer or a seller.
Okay, buyers, listen up. You are in a way better spot than last year. You've got more to choose from and less competition breathing down your neck. Honestly, this fall could be a golden opportunity before any rate changes shake things up. And hey, if you've been feeling priced out, maybe take a second look at condos. Now, sellers, your game plan is totally different. Strategy is everything. You can't just stick a sign in the ground and expect a miracle. You have to price it right from the get-go, you have to invest in presentation, and you've got to be ready to have a conversation, to negotiate. And for all the sellers out there, I really want this to sink in. Overpricing in a balanced market is a fast track to sitting on the shelf and not selling. It just perfectly nails the new reality. It is, without a doubt, the biggest mistake you can make right now.
So here's the bottom line. Ottawa's market isn't crashing, but it's not exactly booming either. It's found this really stable, balanced middle ground. And you know what? That middle ground is full of opportunity for anyone who's willing to play it smart.
And that leaves us with one big question, doesn't it? With interest rates as the ultimate wild card, is this balanced market we're in right now just the calm before the storm? Or is this our new normal? That's the billion-dollar question, and we'll all be watching to see how it plays out this fall.